Hey everybody, it's July 20th at around 4 p.m. right around market close. So this one's going to be a bit long. I'm not sure if they can get through this pretty quickly, but there's just been so much to get through. Basically, been taking notes on what I wanted to talk about in this video for a couple days. Did a lot of research over the last few weeks. I have analysts, about four analysts that work for me in the United States at the moment, and just kind of going through crop numbers, going through supply demand data, going through price action, which is above all the most important thing. And it's been quite an interesting time. And basically looking at starting with the equities. Let's just start there because I think, to me, I haven't said anything about being bullish equities in 2022 at all. I haven't been talking about buying bottoms. I haven't been saying anything looked good. Now I'm starting to see, hey, there's some real interest. We started a few positions at the moment in some of these equities. NASDAQ being one of the newest ones. I talked about that in a couple voice notes and on Twitter a couple times, but I'll dig into that a bit more today. But basically, if we're looking at it year to date, energy still obvious winner. It was the only one that actually was holding a rally at all for a long period of time. XME's behind that, but it got crushed pretty hard recently. Utilities is behind that. Defensive have been, they move up, they move down. It looks like the defensive can take over and then they don't. What they really need to take over is bonds to start moving up. And then I would start to get more bullish on these defensive sectors, but I'm not seeing any reason to get bullish on the defensive just yet. Right now, to me, what I'm noticing is that there's some things that are kind of taking off that have been recent in these drawdowns. Now, why we want to look at the drawdowns and why these are extremely important is because we can see what's going to take over possibly in the next run. So looking a little more short term, in the last 3 months, ITB, which is the home builders, this is, I like this ETF much better than XHB. That's been moving up extremely lately and winning the last 3 months. It's been winning. Now, granted, yeah, is it making money? No, over the last 3 months, nothing has. But what usually is the winner coming out of the drawdown is going to be the winner in the next run. So I would be looking at ITB as being one of the major sectors. IBB, biotechs. Now, biotech is extremely important because that's one of the most risk-on sectors. There isn't really any fundamentals that you can say this biotech company is going to do the best because it's had the best earnings over blank. Yeah, there's a couple companies like that. A lot of it is speculation, though, when we're looking at that space. So this is why we see a lot of risk on capital going into these markets at certain points. We haven't seen any money going into IBB in a very long time. And because of that, that was kind of a good sign of saying, hey, the market could come down any time now. XLV healthcare, that's another one that's moving up. Am I that interested in it? No. I'm interested in biotechs quite a bit more, not that. KRE being a very recent move up in a big way. Now, I like KRE. To me, if I was going to say, okay, there is a possibility of a good rally coming up, and there's a possibility of the Fed slowing down on its rate hiking cycle, because that's the thing that the market really is all about. It's not about what everybody's doing, it's about expectations. If everybody's expecting 1% rate hikes and they hike 75 basis points, that's not going to spook the market nearly as much as 1% would. It's the same as expectations for retail sales numbers or inflation or whatever. Like you have to see that most of the time it's just, as long as the market isn't expecting something, or if it's something unexpected, the market's going to get hammered. So we want to see what's under expectations. Something that's, if we're looking at 1%, hopefully it's 75 basis points, even 50 basis points. And not to mention expectations for them raising rates is going down. So even though everybody's looking at this end of the world scenario with rate hikes, we have to understand the Fed is not what they used to be. They don't just hike till the end of the world, which they really should. And honestly, they really shouldn't do anything. They should let the market do what it needs to do. But sometimes they would need to, and it would crush the market and kind of start a rebirth cycle, which we kind of need. But once again, they're not going to continue to do that if we're in recession, if we're in, because it's the same type of thing as, we did have some inflationary numbers coming into COVID quite before the shutdowns and so on. And they were still pumping at the same time as that. They cut rates as hard as they could, leads us into this part of the cycle that we're in today with all the inflation we have. But semiconductors also being another leader, that's something we like to see in a bull market. So I'm not ready to say I see this being a great bull market and this is going to pick up and be awesome. I'm ready to say I'm interested in taking buy signals in these sectors, small positions, close stops, and we'll see where we get to. So looking at those, this is quite interesting and just kind of telling a story that's a little bit different than everybody else is talking about right now. So if you're looking at ITB over the last month, it's made 20%. So over the last month, it's made a lot of money. IBB, biotechs made a lot of money, consumer discretionary, XLY, SMH, which is semiconductors, it's made 10%, XLK 10%. Tech looks really, really good. And that's one of the areas that I want to really be invested in at the moment. Will that last? I don't know. But for now, the positions, well, it's already in the profit. The charts look good. It's not making, sometimes that's the thing that I was trying to explain to a friend the other day, which is this market doesn't have to make sense. Sometimes things that will go up in the wrong regime just because they are so washed out. And maybe tech finally got washed out just enough to start making that move up, start getting stronger in places that, in a regime that nobody would think it could be strong in, or maybe we're shifting regimes and tech is kind of ringing the bell on that. Either way, it's not impossible for these things to go up. Tech in a certain type of, right before we get into it, like a nasty stagflationary environment, a normal growth slowing inflationary environment can also lead to tech doing pretty decent in that. So, and also commodities, some commodities. So it's a kind of an interesting part of the cycle right now. We need to just kind of keep paying attention to it and see where we end up from here. So all of these are kind of looking pretty interesting. Looking at the Qs, yeah, this is basically looking like it's kind of bottoming. We're seeing this, this has been in a nasty downtrend for a while, going back to last year. Hasn't made a new high, nothing. We got a good fake out here. And then if we look at the relative strength though, let's get the inspect on there. We look at relative strength, we're seeing that bottomed against the S&P all the way back in May. And so relative strength in tech started to take over and it's moving up and up and up. And now it's kind of breaking out to the upside. And same here, we're seeing the same thing on the chart. So we want to confirm both of those, and we are. Same thing here, volume bottom. Now there's more buying volume than selling volume. CCI is getting over 0 again. So this is kind of a fake out. But we didn't really clear over anything. We weren't really bashing to the upside. This one looks like we're kind of bashing the Bollinger Band to the upside, clearing up and out of the Bollinger Band. It's a good signal. Also, we got this nice kind of coil squeeze style pattern breaking to the upside. And then here's tech long-term. This is a weekly chart. You can see here volume, up volume just fell off of a cliff. This is that part in May that started to move up. So looking closely, it looks better. Looking far off, we're kind of seeing that, we're absolutely still in a downtrend. There's nothing that says that this is an uptrend right now. But there's a lot of things saying that there's a possibility that tech could be a leader in whatever run comes next. So have we come down enough? I'm not sure. Let's see here. If we go down to, we can see that we've come down 35% in the NASDAQ. It's pretty big drawdown in the NASDAQ at the moment. And then we'll just have to kind of see where we get from there. But still looks very interesting for me at the moment. Something that I want to continue to pay attention to and be kind of interested in at the moment, and look for buy signals, take buy signals in some of these sectors that we're talking about, and be open to the possibility that tech could start taking off at any moment. Next thing we're looking at, sorry, they make you put the magical dollar signal on that. Stock charts. So Ethereum, to me, has been a very interesting one. I really like the way the chart looks. I like the outperformance in Ethereum to Bitcoin. As we're seeing here, we're kind of getting about around that 200 weekly MA. We're bouncing around. This is what we want to see around those areas. We don't want to see, like in COVID, for example, the S&P just sliced through the 200-week moving average like it was, butter basically, and that's not what we want to see. We want to see this kind of make a stall around here and break out to the upside. At this point, when it broke out to the upside over the weekend, that was a good signal. We'll see what we go from here. It's just kind of this is basically, it looks like it's a possible bottom. Could this just be a bear market rally? Absolutely. This could absolutely just rally and turn on its head. But, with a good signal buy here, nice trailing stop, it could come up and give some back, and we could get a nice trade out of it either way. But the possibility is if tech is moving up and there is something saying this market could move up to the upside, and there is liquidity out there, even though that I know at the moment that doesn't make the most sense, but the market is forward looking. It's seeing things that nobody else is seeing. And that's the reason why it's always really important to look at the price action, because this is what participants are doing in the market as opposed to what they're saying on TV. It's all about a recession and we're all going to die basically, and then there's COVID fears and this and that, and it's the same thing that happened in 2020, where the market's bottoming while the world around you is falling apart, and then it's ripping to the upside while they're saying it's the end of the world. Then we have the election where it literally was supposed to be the end of the world in the United States. The market rips to the upside. The oil, commodities in general, the opposite of what was saying on the news, which is if Biden gets in, by tech, by solar, by this, by that. If Trump gets in, by banks, by oil companies, and then the opposite happens where the oil companies, the banks, and all of those, the reflation trade basically took over. And that was the opposite of what all the analysts were calling for on Bloomberg. So we have to be open to the fact that anything can happen. The market is always looking forward. It's not looking backwards. It's not looking at what is. And so how we see that and what we can do with that is look at it and notice, okay, this is the price action. This is what the price action is saying right now. And here's that breakout a little bit closer. So if we look at that, that's a really good looking pattern. Coming in here, bouncing around, we hit the top of the Bollinger Band. This is the hard thing about some of these types of trades, and I've talked about this many times before, is that when you're putting on this type of a trade, you never know if this is going to just rip straight to the upside or if it's going to come back. So this is why your stop is literally going to have to be all the way down here. And so this hit the upside as a W bottom from a Bollinger Band, hit the top, came all the way back, and then ripped to the upside. And so that's going to be a good trade. We're looking at the original Bitcoin signal, which was over the 0 on the CCI and up and over the 40-day moving average, and we're over both of those. We have a nice cross on the 10 and 40 at the moment. This could be a good trade. We'll see how this works out, but it's a good thing to pay attention to at the moment. And that also tells us other things about the broad market scenario. And if we look at ETH to Bitcoin, same type of thing. outperforming higher lows down here once it got the big sell-off, then broke out to the upside. We look at a longer term chart of ETH to Bitcoin. Generally, it's been in an uptrend against Bitcoin. This is why I want to be in these areas. I've seen capital flow in. As a trader, it's not something that I'm going, okay, I want to own this for the next 50 years. As a trader, I want to own the strongest things. It could be the strongest stocks in the strongest sector, the strongest cryptocurrency in the cryptocurrency sector, also something that's big enough and liquid enough to trade, which leaves only a couple, Ethereum and Bitcoin mainly. So we'll see where we end up here. This has still been breaking the upside. Looks good. Let's take a look at Bitcoin. And if we look at Bitcoin, same kind of close to a similar pattern, that we want to make sure these are at least kind of confirming each other. I don't need it to see it outperform Ethereum. That's obviously why I'm in Ethereum, but I'd like to see it moving to the upside too, holding around the same areas, which is that 200-week moving average. So we're back over the 200-week moving average. This isn't as strong as Ethereum, which is why we are in Ethereum, still under the 10-week MA. So let's keep an eye on those at the moment. So next up, I wanted to talk about some of the energy sector stuff that's going on at the moment, which is crazy, just wildly insane, very different. So if we're looking at Europe, we're still able to make money in some, if you have access to trade those, you need a professional account to do that. But if you have access to trade the overseas markets, some of these markets still look really good. But if you're just in the US, there's been a major beatdown in the commodities markets. At the same time, we're kind of looking at this as a pullback in a primary trend. And it's kind of what I've been talking about when it comes to crude oil and energy and all the commodities in general, is that we're going to see major pullbacks in these sectors. This isn't going to go straight up. And that's how it's going to be. There's going to be pauses. It's going to be nasty. I mean, if we go back and we look at something like, wonder how much data they have on sugar here. That's coffee, that's not sugar. We look at sugar, we go here. Let's see if we got, all right, we do have a lot of data there. Okay. So if we look at max data on bar chart, this was the commodity cycle. Is that pretty? Is that a fun trend to be involved in? Now, once again, this is sugar. This is going to be where things can be incredibly volatile in some of these smaller commodities at the most, especially back then. Very different markets, not traded nearly as heavily as they are today. Obviously, look at the volume from then to now. But these were incredibly volatile trends. Was there money to be made? Absolutely. Lots of money to be made, up and down. At the same time, it was tough to hold on to these trends. And how do you exactly understand what's going to happen? Is it going to go straight up? Is it going to go straight down? Are these going to be perfect trends? Like, there's no such thing as a perfect trend. So, we just have to kind of be understanding that these are going to be nasty. These are going to be vicious. These are going to be very hard to deal with at times and very hard to trade. Here's soybeans, money to be made. Nice. Came back down, smashed around. Same thing here with this soybean trend. Was there money to be made all the way there? Was any of this fun? Absolutely not. So there's going to be a commodity cycle. Lots of people haven't traded commodities, so they don't understand that the commodity cycle is going to be a cycle. There's going to be breaks within the cycle, cycles within the cycle. There's going to be periods of very volatile trades. There's going to be very smooth trades for the last couple of years. We've made some good money, but there's been a lot of volatility in the meantime. You're going to go on TV, see there's a recession, see this is all over, commodities trade is dead. The next week, everybody's talking about commodities, everybody's in them. All of a sudden, everybody's an expert in commodities. Everybody knows everything about commodities. So it's like, you just have to really look inside yourself and understand what you're trying to get out of your trading. That doesn't even mean that you have to be looking at it and going, this is a commodity cycle and I'm going to trade. What I'm looking at is, I have a long-term commodity cycle. I have to be nimble in the way of going, okay, I'm getting stopped. This is breaking trends. I'm out of that trade now. I'm done. But I also have to have a backbone and understand that I'm still seeing what I'm seeing until the supply and demand data changes, until the liquidity data changes, until everything changes. I am going to continue to go, okay, I look at this, I'm seeing exactly what I'm seeing. I'm seeing the primary trends are not breaking. I think we're still in a commodity cycle, and look for either reentry opportunities, holding trades through volatility, whatever it needs to be. However, you're long, if you have a super long time frame, I'm not saying you probably are holding on to something as vicious as this, but I'm saying that, if you have a super long time frame, you might be able to hold through this whole thing. These were probably 20% pullbacks. People don't think about that. People think that this is some smooth trend, but there was probably 20 to 40% pullbacks on the way to the upside in soybeans here. So we have to be really nimble and understand that that's how that trade is going to work. There's going to be breaks. There's going to be lots of periods, and not to mention hyperinflationary cycles, and inflationary cycles have a lot of hard pullbacks. So this, at the moment, I'm still saying something that's saying this is still the trade, but we have to be nimble, getting in and out of positions, look for reentries, look for exits, and holding on through volatility during certain things that we're looking at. Maybe small positions, wide stops. That's a way to look at it. That's something that a lot of people don't think about, because everybody's like, if I had taken if I'd have taken $5 million and put it in this here, I would have made, $1 billion by here. That's great to think about. Sounds really fun. At the same time, your 5 million turned to 10, then turned back to 5, and then turned to 20 and turned back to 10. Can you hold through that type of volatility? Well, most people can't. So we're going to have smaller positions. If you have a $5 million account, you have a $100,000 position. That 100,000 position can become, your 100,000 to 50,000. If you're a $5 million account, that's not going to kill you. It's a 1% pullback in your account at that time, so you're able to hold on to that and make that 100,000 into a million or 2 million or 5, whatever it exactly is. But I'm saying that you have this way of trading. This is going to be small positions, much different than you're going to usually trade, because commodities are very volatile products, extremely hard to trade. Or maybe you just don't trade commodities. There's a lot of people who just don't and can't. So maybe there's other things that you want to look at. So it's a very interesting market. Just kind of wanted to go through that real quick, because I have so many people kind of talking about that right now and seeing so much of it talked about online. And it's like, sorry to tell you, but 20 to 30% pullbacks in oil is going to be very normal, and continue to be normal in this type of a market. So looking over spreads now, I've heard everybody talking about the market either being in backwardation or contango, and because of this, it's just going to be this crazy market, and you can make all this money, and it's really like it's really elementary stuff, honestly, to just say the truth. They're looking at the curve and they're going, okay, look at this. Since this is going down and roll, you're getting paid to roll. You're basically rich. This is the easy trade. You're gonna make all the money in the world. Well, these come in, so we have to look at what direction these are going. That's the important thing. Is this spread getting wider or is it coming in? So if we look at this we want to really look at two spreads. Two spreads are the most important spreads in these markets. So one of them is going to be the 1-year calendar spread. And then, so if we're looking at the 1-year spread, you can see that these bottoms coincided with rallies in the market. So we had one in August at a bottom in the market in oil, and that had a rally which petered out around here, and another bottom in December in the market that also coincided with another bottom in crude oil, and then we had those tops. We could see that we were still seeing a lot of supply tightness coming in as we're moving up. This mainly ran into other products like gasoline and heating oil instead of oil with that time. This came off, and now we're possibly looking at another bottom in that spread again. So if we're looking here, this is the front month spread. Sorry, just kidding, wrong spread. I guess it doesn't want to show that one. Okay, where is it? Okay, here we go. This front month spread. So same type of thing. Let's look at a 1-year chart. We're seeing those bottoms kind of come in. This one's going to be a little bit messier, and it's really going to be kind of vicious in between. We're seeing that was the bottom and that big pullback that happened in this year. This is possibly the bottom that happened right now. So we'll see if that's the case. Once again, you can't just look at this and go, this is what I think is the problem with a lot of people when they're trying to say what markets are doing based on these things. One, most of the people looking at this and saying that and are bearish are the ones that have been bearish energy the whole time. They haven't ever bought it. They thought it was a stupid trade in the first place. They're the same people who said there were better trades out there, and they aren't going to buy energy because you can get burned in energy. Yes, you can get burned in any single thing you want to trade. So if you want to make money, you have to get over that. But looking at this, and then on the other side of it, everybody who's trying to say, okay, well, the market is going to do well and oil is going to go to $500. They're the ones pointing at this and going like, look at these spikes. It was over 3. The spike went up when the price came down the other day. So as the spread is going up, yes, that's a good sign. It's telling us that supply is still kind of constrained. But at the same time, anything is possible in these markets. I like to just watch the spreads to kind of tell me it's kind of like a roadmap. Here you go. But once again, you have to follow your plan. You have to follow your stops. You have to follow your research. And you have to really look at the supply and demand data to kind of understand and make sure it's going with the spread action. There's people who can panic. There's plenty of panic into other contracts that will always happen in these markets. So we have to kind of pay attention to that and be willing to be nimble in this. Another thing to look at is the COT reports. So if we look at COT data, look at gasoline, we're noticing that they are buying this pullback. The whole time, basically, since we had the first pullback, they've been elevated in buying. Now, COT data, once again, it's another thing that's very similar to what we're talking about. This isn't going to tell us everything. This is going to tell, this was right around the election time. That was a big buying time. And we're seeing that we're at that same level, even above that level at the moment. Most of the time, this puts in bottoms where we can start to see that we're going to see rallies out of these zones. And that's mainly because we're seeing that there's interest in it. They're putting in a bottom in that market. There's interest in it as the price is pulling back. It's kind of like when people say, well, I like when Warren Buffett owns a stock because if the price comes down too much, he'll buy more. It's the same kind of thing as that, where we're kind of seeing the price pulling back. They are interested. That's a good sign for a possible rally. And that's what we're looking at. We're not saying, can't say this is going to happen 100%. Can't say this is not going to happen 100%. We can say this looks good here. That's what we're looking at all the time. We're trying to get the probabilities on our side, make sure that trade is going to work out as well as it possibly can be for us all. And then if we look at WTI physical, same type of thing. We're seeing lots of interest in these pullbacks. This is exactly what we want to see to say, hey, this is a good market. This is what we're looking at the moment. We're seeing that there's interest, so this could be a possible buy. Natural gas also getting bought up. You're saying since 2020, since it kind of got out of its very beat up bear market, we're seeing that there hasn't been a ton of interest on some of these pullbacks. There's been interest, but now we're at above that normal interest zone, and we've seen a huge rally in natural gas in the last few days. I don't think it's going to stop. I think through August we're going to see a nice rally into natural gas as well. Probabilities all look right for that too. So if we move up to, there's lots of things that are kind of saying there's possible bottoms in some of these products, and then there's also things that are saying there isn't. Cotton kind of looks like another possible one, with Texas kind of being in drought, and not to mention they're having to liquidate cattle because of it. That's another one. But at the same time, we had a failed monsoon season in India. The cotton isn't the thing I'm going to be the most bullish on. But I'm saying that there's the possibility of a bottom in cotton. I'm not extremely bullish on cotton by any means. Then if we look at lean hogs, this has been one of the markets that I've been very interested in lately. So we saw some buying, turned into a nice rally, pullback, saw them come in and buy, turned into a nice rally. Another one came back, bought, turned into a nice rally. And this pullback, which was a very small pullback in these products, really came into a nice rally. We're above zero, so we're in a market where most people are hedging. We are seeing that get to positive at the moment in lean hogs, so that's also another good sign in that market. I am very bullish on the meats right now, and I think that might put some pressure, and why we've seen some pressure on things like soybean meal and corn at the moment. Right now we're looking at cattle. Cattle's kind of looking similar. They're coming in, they're buying. There's major herd liquidations in Texas at the moment because they can't feed the cattle. They're having to either get rid of them, and not to mention, I think that's going to put even more pressure on the feeders as there's no calves coming from these cattle. So, we're also seeing commercial interest. I think this could be a very interesting market, especially the feeders. I think that's even more of an interesting market than live cattle at the moment. So looking at live cattle, same thing, or sorry, feeders, same thing. Seeing a lot of buying coming in on these dips. It hasn't been an exciting market, but that can change very quickly. What was one? That's soybean meal. Not interested in soybean meal at all. It's a great short at the moment. I think a good trade would be being long soybean, being long the crush, or trading the crush, being long soybean oil, and short soybean meal. Obviously, what we're talking about with the cattle and hogs, we're not seeing as much feed being needed for these things. It could even put pressure on soybeans and plenty of pressure on corn as well. And I think that the commercials are seeing that. This is why we're seeing them kind of pull back away from buying this dip. They're not buying this dip. Good time to short soybean meal. Let's see what they're doing in soybean oil. Soybean oil is the opposite. They are buying that dip, and usually that's putting in a bottom in the market. Chicago wheat. Chicago wheat's also seeing a lot of commercial buying coming in. every time this has happened lately, we have seen a nice rally out of it. So once again, another thing to pay attention to. Um, Chicago wheat is getting bought up like crazy lately from commercials. It could have made a big run, but I think that the bottom might be in for wheat. And then speaking of corn, we are seeing some buying, but to me, I would think that that would be a much bigger opportunity to buy more than that. But once again, once we're in these bull markets, buying is smaller and smaller because there's more commercials or hedging than not. So they are coming in and buying. They bought that dip. They are coming in and buying this dip. Um, we'll see where that ends up from there. And then coffee. Now, fundamentally, I like coffee, but once again, I'm not seeing as much buying as I would like to see, but it is getting bought. So I do like coffee still. I think it is a good trade. If you do have a buy signal in it, it would be worth taking. However, it doesn't look that phenomenal. Cocoa, been the toughest trade of the last 2 years. Uh, Probably one of these days it's going to break out to the upside and never look back just because it's just been such a motherfucker to trade lately. But once we get to these levels, we've seen that it has rallied. Is a rally nice? Is it pretty? Is it fun to trade? No, it's shitty rallies. You probably get stopped out even or at a slight gain or a slight loss each time. Um, we'll see where Coco ends up, but that's been a terrible, terrible trade over the last couple of years. Sugar, the commercials are coming in and buying up that dip as well. Um, they bought the last couple dips, so we'll see where that ends up. That's probably that sugar. I'm surprised that it hasn't moved as much as it has. I don't really have anything great to say about it at the moment, but worth keeping an eye on just to see what is going to come of it. So looking at all the COT data, we want to look at it just to kind of understand. Commercials represent um, people who are using the market to offset risk, and most of the time these are institutions or producers, and they're going to know a little bit more about the market than other people, which is why they're usually called the smart money. They're usually buying the dips. They're usually selling the rallies. They usually have a good edge in the market, whereas most other people do not. So that's why we pay attention to these. Um, and all these energy markets from all over are also looking very good. Um, Basically, if we're looking at overseas in Europe, that's been a crazy energy market. There's been a lot of commercial buying in a lot of these, but that's also to do with we have a really crazy problem with energy in Europe at the moment. Palladium, to me, this looks like another trade has really started. Um, I really could see Palladium being a major mover again. This is a quick trade we did this was last year into early this year. Quick trade, made some money. Had another trade in it back there. I had a trade in it longer a while ago. That was phenomenal back in 2016 to 20. I think that would even stopped in 2020. Um, so there's been some very good trades in Palladium. It's a very big contract, so I don't suggest everybody trading it unless you can do it. There's also an ETF for it now, but we have all very. I think that's actually all time high. Yeah, we have an all time high in buying from the commercials at the moment. I could see that being a really good trade. Fundamentally, we're also looking at the supplies are tight, a lot of trouble producing it at the moment in certain areas. That could be a great trade. So Palladium is another one to put on the list. I haven't looked at gold at all lately, not looking at buying it by any means, but we are seeing commercials are buying it. Um, Usually the one that's kind of a good sign for a rally from the commercials in gold is when this gets above zero. Most of the time they're hedgers, they're hedging their risk by shorting. So when that gets positive, which it did here before that rally in 2015 and 2016, it did here before this initial rally that happened from 2018, where it went from about $1,200 all the way to $2,100. So, we can. There's possible some good rallies coming. Are we still in a gold bull market? So is these slight upticks worth anything? I don't know at the moment. I'm not very interested in gold or silver at all right now. Lumber's another one. There's been a lot of interest in lumber. It's been pretty wild. And so it's the same type of thing. We used to see a lot of commercials buying a lot of lumber all the way back when it was kind of in a bear market, which is what they do. They accumulate at those times. Um, Buying a little here, which caused a rally. Buy here, there was a rally. Um, Buy here, it's another rally. Buying on this dip. So the whole thing we're looking at is we can't time from commercial buying. But what we can do is see that there is interest on these dips. There is interest in these commodities as they're falling. And so when there was interest here on this dip, it's what created this rally. And now there's interest here. And we are above zero at the moment. So that's pretty positive. So lumber also, I think, will be a great trade coming up very soon. Copper, not interested in it because of the price action. Looks terrible at the moment. However, I could see that becoming a very good trade as well. We are seeing that commercials are at a level that we usually don't see in bull markets. Now, are they just accumulating because the price is coming down? And are we in a long-term downtrend? Um, at the moment, the trend is down. So we'd like to see this turn around, and then we could get some idea of when to buy. But at the moment, price is just coming down, price is going lower. Um, Copper, to me, we're just kind of sitting at a support zone. This could bounce and turn around, but I want to see some action before I'd make a call on that one way or the other. And so going over the weekly view, just to go over some things that we normally look at. Aussie dollar to yen, still saying that there's more upside in the inflationary market. Is that the case? We'll know soon enough, one way or the other. Already went through Bitcoin. Canadian dollar broke down and then turned around. So this is one I would also like to see to start confirming the energy move. If we're going to continue to move up in the energy markets, I'd really like to see the Canadian dollar start to follow. That would make some sense. Coffee, we talked about it before, um, but it's really this pullback, the squeeze that we're seeing here, major squeeze pattern. Can we see that break to the upside? Absolutely. Um, this is kind of creating a engulfing pattern on the week. So if we get an engulfing pattern, we start to get above this zone and we break above that next week, that'd be worth a buy and a shot at coffee at the moment. Always understanding your risk. Now, copper, let's go back a little bit further. You're seeing copper kind of coming into the zone that's basically within this range of all this support here. So we're also around the 200-week MA. Most of the time, there's a lot of algorithms that are buying around there. We need to see that hold, and then we can start making opinions on copper. Copper to gold ratio breaking down. Um, that hasn't for once the copper to gold ratio hasn't been telling us much. It kind of gave a hint that we were going to see a jump in bonds, but we never saw bonds break out to the upside. So still not really telling us much. Corn, uh, chart just looks like sitting around that bottom zone, not bullish, not really bearish, not really anything, just a neutral, do nothing type of trade. Cotton hit perfectly off of that 200 week. Getting above this zone could be an interesting time to buy something like copper. Once again, it's not worth doing anything with at the moment. British pound looks like shit. That's the euro and the pound are still on the short list at the moment. So I'd say short those. Either way, it's a good hedge against the other trades. Gold, nothing to do there. We haven't taken out the the lows from 2021, so we'll see how that ends up. But that's interesting. At the very least, it's holding. Yen still a short, absolutely a short. Lumber, and this was nice too. It bounced around that 200 week. It's been holding up. During those weeks that the market was coming down and commodities were coming down, lumber was actually rallying a little bit for many reasons. But we'll see if that holds, if that turns into a real rally. Natural gas, and it's up even more today. Uh, I had somebody tell me the other week that I was nuts for talking about that. You know, there's a possibility like that I still like natural gas. I can't see anything that kills this market at the moment. That's the thing I'm kind of just getting at. It's not that I I think that you're going to have to trade it. I think you're going to have to be tactical and sell and rebuy and do lots of things because it's the toughest market to trade in the world, or have very small positions. Whatever you do, it's going to be a very tough market to trade. However, natural gas has phenomenal fundamentals that can absolutely take it up a lot more. Palladium, we already talked about the possibility of that being another rally, so look for buy signals. Platinum, nothing to do. Silver, nothing to do, even a short at the moment. Soybeans, really not much to do, but the ag trade could be a very interesting trade coming up still. So once again, we got to keep in mind about feed for the animals, but the live cattle, hogs, these look really good. Sugar had a little breakout of that flag, just been moving sideways. The dollar diffusion index, Pring made this indicator, which is pretty interesting. In my opinion, it's not something that I use to trade, but it's something I use to kind of go, okay. I use it more as a level. When we're up here, it's not something that I want to short. When we're down here, it's something that I might want to short the other direction. So it's something to kind of pay attention to that way. But the dollar's been raging. Yields here. So we're starting to see the 1 month, and this is what I would expect to see a lot more of if we are going to get into an actual bull market in stocks again. I'd like to see this spread. I'd like to see this start to move down. It'd be an interesting trade at the moment if you are bullish on the market. I don't see a reason to make this trade yet, but it could be a good trade to write down and come up with at another time, which is buying the short-term rates and selling long-term rates, thinking that these are going to pull apart a bit more as either the Fed slows down or the economy picks up. That's not a trade yet, but I think that's going to be a trade at some point. I like either bear steepening trades or bull steepening trades, and vice versa. Crude, when we look at it from a far off angle, we're seeing that this is still just pulling back to moving average. Doesn't look terrible. Not really breaking up or down. Just sitting in these zones, creating new ranges, sitting in the range, moving up to a new range, sitting within that range. So once again, we're at a very close point where we could either start to break down or not. So keep an eye on that one. Emerging markets index looks like crap. Canada starting to turn around and looks better than most markets, but still not really a buy at the moment. Japan, very interested in Japan at the moment, and it's kind of looking like very similar to tech. We're seeing some relative strength in it. It could be a market that gets some movement to the upside. We're seeing that kind of coil pattern. Um, did see that we've had relative strength in it since April, so that's a little earlier than the Nasdaq. So that could be an interesting trade at the moment. Looking for something in Japan. And then bonds. And this is what we talked about earlier, where we said that there was the downtrend in bonds, and we're kind of seeing that it's kind of making this coil here, and get a little bit closer on that one. And so honestly, I hate these. I don't mind ascending triangles or descending triangles where there's um, higher lows and then flat. But this is I really hate drawing pennant patterns because there's no memory here. There's no memory from market participants this way or market participants this way. There's flat memory with a certain price, like let's say 120. But at the moment, we are kind of creating this kind of pennant pattern at the moment that's tightening up. This could lead to a band squeeze breakdown or a band squeeze breakout. Either way, if I was looking at TLT, I'd be really paying attention to this 120 level. Um, if we can get above that 120 level, start to really make some moves, that would tell us a lot about the market. Is the market going into more of a growth slowing, um, stagflationary type of market? Is it going more for a 2019 market where we're going to see utilities, consumer staples, and all of these kind of take off for a bit? And we also have to always keep in mind that it is summer. Summer, we do see a lot of flood into defensives, even bonds. And so if this starts to buck the pattern to the downside, that would tell us something. And if it starts to take the seasonal pattern to the upside, that would also tell us something. So right now we're kind of in a don't do much, don't overreact, um, don't buy everything, don't sell everything. Just look at what you have on the board. Be ready to take new signals. Be ready to be nimble and shift if you have to. And other than that, hope you guys have a good week, and we'll talk soon.